Hi, this is Phil the Laptop Trader, bringing you our March update. Welcome to our community. I'm here to share my experience and give back to the stock investing and trading community, one video at a time. This just covers what we're going to cover in this series. You have my email contact and a quick caution and disclaimer. So please protect yourself at all times. For March 2023, just give you some outlines of what's going to be in this video. Quick review of my approach using market stages. This review is going to be in every video because I think it's important. This month we're going to discuss the emotions of the market on a chart and how you can see that. This is kind of something I learned from Greg at Master Trader. It's not something I really considered until I kind of got involved and subscribed to Master Trader, but I think it's kind of important to understand. We're going to look at the S&P 500 ETF SPY market overview into March. Then we're going to kind of switch gears into an example of Upwork company of why you need to do your homework before you trade or invest. I just use barchart.com and a few other places to gather information. And if I have time, I'll share some different platforms. I've shared platforms in other videos, so that's may or may not make it, time permitting. If time allows, I'll share 2 new websites that may be useful to you. Also, if I have time, how to use the Paint online extension in Chrome to where you can draw on your charts to just kind of highlight some things you may find important. And then again, if time allows, I'll share some different movies I've watched recently. Maybe some of the best financial movies I've watched, both funny movies and more serious topics on that. And this video slideshow was put together using Google Slides, Paint Online, and Microsoft 3D Paint. These are tools that you may find helpful. So big thanks to my wife on a few tech issues. So we had tech issues with a platform, we had tech issues with Google Slides, and for some reason we had tech issues with the recording software. So I don't know what happened this month, but this video is coming out late on Monday night instead of on like Saturday or Sunday. So kind of frustrating, but we worked through it. Again, for review, I'm going to review the price bell, why I use this approach. Check out our introductory video. I highlighted that in the introductory video. Again, there's 4 basic market stages using price action. That's kind of what it will look like on a chart. And this is just a line chart with no moving average. It's just a repeating pattern of money flowing in and out of a market. Pretty basic. These are different names for the 4 stages, including accumulation, greed, distribution or the peak of a move, and then stage 4, fear. This is the reverse. What happens when stocks or companies go into a downtrend, stage 4, and then they consolidate stage 1, and then many companies will return back to a growth stage or another uptrend. Here is a very clear example of the 4 market stages. This is a 5-year monthly chart. Each bar is a month of Zoom video communication symbol ZM. So you can see very clearly the 4 stages on this chart. So it's a real thing. It's not something that I made up. It doesn't come from numerology or astrology or Buddhism or something like that. It's real price action with real emotions behind some of this price action. So this would be an example of the reverse of the 4 stages, again, where you can see the downtrend, the sideways trend, and then kind of a return to an uptrend on this shorter time frame. This chart I'll include in every video is simply to, if you don't know how to read candlesticks, that's how you read a candlestick. Okay, so I'll leave that there for a few seconds and take a drink. You guys can, never seen a candlestick before, that's what they look like. Again, this channel is for the basics, so it's too basic for you, you're welcome to stick around, but I think these are helpful to review. This is kind of the main setup I use when looking for a new uptrend. You call it what you want. I call it 3-bar turn, where you get a pullback. You get usually a change of color candle, not always, but maybe like a bottoming tail candle at the bottom. Then you get the third candle, which usually will override the first two and will close above the first two. That's kind of what I'm looking for, and I'll cover that in this month's video. Here is a here we're going to get into reviewing the markets for this month. This is the 5-year, okay, going back 5-year monthly chart for the S&P 500 ETF, symbol SPY. So what you can see on here is some declining range bars over here on the right, okay? What I mean by that is you can see on the chart declining volatility, more agreement in price, and kind of a bullish to neutral pattern. So if we look all the way here to the left over here, can you see the range of these bars from the top to the bottom, how they're not very big? And then when the price moves down, you can see the range expand. And then when buyers re-enter the market, you can see the range expand and then it tightens up again. And then here, you can see kind of a similar pattern where you had a down move, right, in March of 2020, it expanding ranges, red bars, and then expanding bars when it returned to an uptrend. So here, more towards this side, this would be the end of 2021. This would be 2022. You can see the size of these bars in this bull market or this bear market, or this downtrend. And you can see stuff like these topping tail bars, large red bars, another large red bar with a topping tail, and then you get a reversal, this green range expansion bar, and then you see over the last 5 months this consolidation, if you will, this narrowing of the range. Now this was December. We had a red month. We had January was a green month with a higher low, with about an equal high. Then we had February, which pushed prices up and then left a topping tail bar, a red bar, towards about the top, I don't know, at least the top half of January. So prices tried to push higher, but then they couldn't. And now in March, we've opened with a green bar up in the top third of all of this. So you can see the pattern of prices slowly increasing a series of higher lows, which indicates that buyers are more willing to pay higher prices for this ETF. However, sellers are still present just above that. And so you get this pattern, this kind of wedge pattern, which is kind of pressure is increasing to push prices higher. That's what the emotions of this chart are telling me. They're telling me that there was all this fear, and now over here, fear is kind of dissipated, at least somewhat. Not completely, but that fear is starting to come out of this market, which may, not necessarily, but may indicate that this bear market is coming to a close. And at the very least, it looks like we're going to trend sideways for a little bit. So that's what I see on this chart. The emotions of that chart, that's what it's telling me or suggesting to me. Let's go to the next slide. I'll let you guys just kind of think about that for a minute. In fact, I've maintained for quite a while that the stock market's not going to go up until we get rid of some of the volatility and some of the fear. I think we're starting to see at least a reduction in fear. Now this is a 2-year chart of the same ETF using weekly um, price candles. And you can see on the left in stage 2, we have these smaller range candles in an uptrend into a stage 3 top. Okay, these tops will be identified with candles that have expansion of range or expansion of the size of the candles. You can see that. And then in stage 4, you get, obviously a downtrend. Now, recently has been the first time we've had over here. Here was a pivot low. Here was a lower pivot low. We finally got this higher pivot low on a weekly time frame. So that's kind of bullish, right? And over here, this will be considered bullish too. This last bar, this green bar with a bottom tail, it shows that buyers have stepped up right there. So no longer did price have to retrace so much, and buyers are starting to step up sooner, willing to pay more for the market or more for this ETF. Okay. We can also see this green line, which is the moving average, where price trended down below this moving average, and now prices kind of went through the moving average and pulled back. So that's also kind of bullish to neutral. We can see in this area here too in volume, see a lot of selling volume, spikes in selling volume. Whereas toward the right, we're starting to see more and more buying volume, more and more buying pressure, and smaller red candles. And you can see that on this pivot right here. We had 2 large red candles, and then buyers stepped up, and the candles decreased in range, which then pushed prices up. So the only bad thing about this chart really is right here with these topping tail candles. So there's definitely some selling pressure in this market and some buying pressure, which my forecast would be more of a neutral market here in March and maybe into April. But looks like buyers are starting to step up sooner. So that's a weekly chart. Here, I'm just kind of showing you guys a little bit about range, price range, and how you can see volatility through price. If you look at the left of the chart here, the narrow range in 2021 and the uptrend in price, okay? See a lot smaller candles. And then in the stage 3, where we had these highs, but then we had a lower high and a weak new high and a lower high. This was stage 3 into stage 4 in 2022. And you can see just between this line and this line, the range of that price. And that range equals volatility. Whereas over here, you had a much narrower range, okay? So stocks and ETFs will always move back and forth. But to me, one of the things that really matters is the size of that movement. So that range is very volatile. It was very hard to trade in 2022 if you were a maybe a buy and hold investor or a swing trader looking for price appreciation. It was a very difficult year in 2022. Now in 2023, since December, we've had kind of this uptrend, okay, and on a smaller time frame, an uptrend. And we can see this pivot low, a pivot high, and then a pivot low, and now another pivot high and a pullback into March. So this looks very positive to me of not only buyers kind of slowly pushing this market up, but also sellers not so willing to push the market down, and a narrowing of the range, much narrower than this range. So that is why we've seen a decrease in volatility in 2023. Again, it doesn't mean we're necessarily out of the bear market totally, or that prices can't retrace or even go sideways for a year. But I think the lower volatility is definitely helping the case for higher prices, or at least stable prices. So that would be kind of a forecast for you on that. And the emotions, right? So I was going to talk about emotions in this video. So the emotions here were euphoric, and the emotions in this bear market were fear. Now you can see on the right of the chart in 2023, some of the fear has gone away. And that's kind of what you're looking at there. Here we have a more highlighted view. This is the same chart of the SPY, 1-year daily chart showing decreasing overall price range and volatility. And the June failed breakout, which was back here. Okay, this was a failed breakout last June. This looked really good in June last year. And then the market just tanked. Also showing prices are slightly lower than a year ago. So if you go from this bar here, this price, and this line to here, prices are slightly lower than they were a year ago. And now we've got this moving average line is starting to slope up, which is the 50-period moving average. We also have a more controlled rounded bottom here in December, okay, versus these V bottoms, okay, and into January 2023. Buyers of this index are now willing to buy sooner at higher prices, as indicated by these pivots right there. So fear is decreasing. Again, fear is a powerful emotion, just like greed. And it looks to me like fear is starting to increase. We've had these volume spikes on these pivots. See the red volume increasing, and now we're starting to see green volume starting to increase. In other words, people are willing to buy again. Their fear has subsided, at least to some degree. So that's what we're looking at there. Let's take a look. Here is a different time frame of a 6-month time frame. Again, showing large green range expansion bars on volume in October, and a 52-week low, which was right here. This was October 2022. That was the low of the market so far. And then a new high here in January 2023. And lines showing clear resistance by the 410 area right there. There's 410. And arrows highlighting the 3-bar turn setup at different times on this chart. Again, nice rounded bottom in December of 2022 after a pullback. And you're starting to see more buying volume versus selling volume, and a reduced range on these candles. So can you guys see that, where, this is a big selling candle, this is a big buying candle. These were big selling candles. And now you're not seeing as many of those big red selling candles. Yes, there's still some in here, but clearly you're starting to see more buying taking place, okay? That's all I want to show you guys on that chart. Now, we're going to switch gears a little bit. And this month we're going to look at some facts and an article on Upwork, company symbol UPWK, and why it's very important to have a trading plan and why you must know what a good investment looks like for you. If you don't have a plan and you don't do your homework, you may buy an investment that is not appropriate for you based on someone else's article or news program or an opinion. So let's do a little homework on Upwork right now to show you a little bit how I may analyze this company. So here on this service bar chart, we can see I'm going to use just this main screen. So you would type in here Upwork or the symbol UPWK. You'll get a price overview. And it just shows different information, right? Name of the company, closing price so as of that day, the day's low, the day's high, how much volume traded that day, what the average volume would be, different 5-day change numbers, 52-week range, some basic fundamental information, market cap, sales, income, stuff like this, price earnings ratios, most recent earnings on um, February 15th, remember that date, and the next earnings date. And then here you've got just a 1 year basic candlestick chart. So you can see it's still kind of in this downtrend, maybe making a double bottom. And then of course their opinion, which I pay no attention to their opinion. I'm trying to make my own opinion. Okay. So that's just a basic overview using some facts. Okay. Next slide. Next slide, I'm going to show you why I don't pay attention to opinions or news stories. So under the left tab, go back, on this side over here, you can get a news story or any other information you want on the company. And if we go to the next slide, you'll see under that menu, you'll see news and headlines. Okay, there's other analyst ratings on the companies, financials for the companies, but most recent stories. So remember, earnings were February 15th. This article, buy bar chart on Thursday, February 16th. Isn't that interesting? Let's read through this. 3 reasons why you should consider Upwork for the long haul, right? Although freelancer networking platform Upwork posted an earnings beat recently, there are other factors that help drive the bullish case for Upwork stock. So they're basically promoting that you should consider Upwork as a purchase. Again, here's the title. Here's the author, Josh, at bar chart, written Thursday at 9 a.m. Remember, earnings were Wednesday, February 15th. And then if you want to follow this author, which I checked him out, and he's just an author. That's all he is. And this shows, yeah, that's it. So this guy's writing an article on Upwork for bar chart. So here we go with the article. Although an inherently risky investment because of its predominantly aspirational profile, market participants seeking a viable long-term opportunity should target freelancer networking platform Upwork and connecting enterprises seeking to fill short-term business needs with independent professionals. Upwork represents a direct player in the burgeoning gig economy. Recently, it posted a positive earnings result that attracted significant interest in the open and derivatives market. So they're basically a platform that supplies temp labor. According to Zacks Equity Research, which is another service, Upwork came out with earnings per share of 4 cents per share for the fourth quarter of 2022, beating the consensus estimate calling for a loss of 3 cents per share. So they beat expectations. Further, the latest earnings per share print compares favorably to the loss of 5 cents a share in the year ago quarter. These figures are adjusted for non-recurring items. So that is code right there for they're not using what's called generally accepted accounting principles. They're using non-generally accepted accounting principles for that number. Notably, over the last 4 quarters, the company surpassed consensus earnings per share estimates 4 times. So they're generally beating what's expected. On the revenue front, Upwork rang up so much for the top line number, beating the target by a little bit. And then the freelancer platform posted sales of 136 million. As well, Upwork beat analyst estimates for revenue 4 times out of the last 4 quarters. So he's making a case that you should buy this stock. I'm going to skip that paragraph. And then finally, while the bullish swing undoubtedly centers on the latest earnings print, there are 3 other factors that should help make Upwork stock a buy for the long haul. First of those would be rising worker disconnect. In other words, people don't generally like working for these big companies now. They want to work independently. So that's one reason he's giving for that. And he goes into that reasons. I'm not going to read through that, but the gig economy, 85% of U.S. workers are considering leaving their jobs. He's talking about the new normal of remote operations or working from home, and the lack of physical oversight over employees. And then finally, American workers on average wasted more than 2 hours a day, translating to billions of dollars of lost productivity. So they're making the assumption that because people are working from home, they're not as productive. I don't know if that's true or not, but there's unproductivity wherever you look, whether it's at work or at home. So that's his case for that. Then Upwork benefits from consistent growth. Okay. So as stated earlier, he says Upwork represents a growth machine, having beaten revenue expectations 100% of the time over the last 4 quarters. However, it also enjoys a performance on the top line that not many people may know about. So, since at least Q1 of 2018, Upwork has so far posted an unbroken chain of sequential quarter to quarter revenue growth. And irrespective, he says right here, irrespective of massive front page headwinds, COVID 19, inflation, geopolitical issues, and mass layoffs, Upwork continued to chug along. Okay? But for now, this aspirational enterprise continues to expand its footprint meaningfully. Once the gig economy really gains momentum, an assumption in my opinion, Upwork stock can veritably soar. Certainly, it's a name to keep on your radar. So he's made this bullish case for this company. And one thing I want to read you at the bottom is this, okay? On the date of this publication, Josh Enomoto did not have, either directly or indirectly, positions in any of the securities mentioned in this article. All information and data in this article is solely for informational purposes. For more information, please view their disclosure policy. So he does not have any skin in this stock. He's just a writer. He's an author, probably paid to write this bullish picture for Upwork. Now I put this in here. My conclusion is that Josh was probably paid to write a favorable article on Upwork the day after earnings or into earnings. One thing left out of this article is that Upwork loses money on the bottom line. So there's no mention in these 3 pages of the bottom line at all. It never mentions the bottom line, right? The author also, and most importantly, has no skin in the game. He's a writer. That's his job. He is doing his job. And I have no problem with that. Sorry about the spelling there. So, in other words, he's just doing his job as a writer. Somebody paid him to write this favorable article on Upwork. He did it. He probably got paid for it. It's up to you to come up with your own trades, your own opinions. Do not rely on anybody's opinion, news article, TV show, on what you should buy or sell. That's the point of me going through this, okay? So guard your mind against other influences and stick to your trading plan. If Upwork fits in your trading plan, you may want to consider trading it. But if it doesn't, don't pay any attention to this guy. He doesn't care if you make or lose money. He's just an author. And I have absolutely no bone to pick with this author. He simply did his job. But you have to guard your mind against some of these influences if you're going to be an individual stock trader. So that we will leave at that. Again, I'm just going to show you some other facts on Upwork. So Upwork over these 3 months has underperformed Google, Uber, Shopify, Baidu, okay? It's lost 1.3% over 3 months. Meanwhile, Uber has gained 20%. That's fact. Here we have Upwork related ETFs or sectors, right? So over 3 months, Upwork's lost 1.37%. The overall Russell 2000 has gained just under 2%. The small cap Vanguard ETF has gained 2.6%, and others have done similar, right? The total market's lost 0.21. So Upwork is underperforming the market and its peers. That's why I show you that. Finally, let's take a look at earnings estimates. Average estimate was to lose 21 cents a share, right? Their growth rate year over year has been negative. And this just shows the business summary of what they do. They simply provide online recruitment services. They're basically a temp agency that's online. And, I don't know how much money is in that stuff, but that's all it is. This chart highlights how earnings per share with price action and stage analysis can give a heads up on a forecast going forward. So earnings generally look back 3 months at performance, and the market generally looks forward with expectations for growth. So it's kind of a weird thing that there's all this hype around earnings, which are looking back in time, yet the market is looking forward. Usually pricing in forward earnings growth or decline. This is not 100% accurate, but may keep you out of trouble or help you to take profits. So this is a 2-year daily chart, and up here we had a high of $64.49. On the low, we had a low of $9.79. Currently, this is at 12.21. This is Upwork's chart. So these are the facts, guys. These are non-GAAP earnings per share. So back here at the peak of the stock, it was losing 6 cents per share. At this peak, it was losing, right here on this earnings announcement, before the peak, losing 6 cents per share. At the peak, losing 13 cents per share. At the next peak, which was the double top, they made 4 cents per share, okay? So between here and here, the stock lost over $4 in value, yet earnings went up. Then we had this stage 4 decline, and this earnings announcement, they lost 5 cents per share. Next one, they lost 3 cents per share. Next one, they lost 4 cents per share. Next earnings announcement, they lost 3 cents per share in October of 2022. And most recently in February, Upwork posted 4 cents earnings per share. So I want to highlight this to you guys because in that article, he says Upwork has an unbroken string, 100% unbroken string of earnings beats versus expectations. So this whole time, they've been expecting Upwork to lose money throughout this decline. And so to me, that's not a real great expectation of a company to keep losing money. And that's why I want to highlight for you guys on this chart and using this earnings information that, okay, so they beat expectations, but they still didn't make money. And I think that's a big deal. And I think that's why we've seen in this market stocks go from, these heights down to these lows, because finally people in the market are considering the fact that, you need to make money to stay in business. So I want to show you guys a little bit of a alternate point of view and how you can use information to pick good investments for yourself, okay? Again, this is not a recommendation or a suggestion to either buy, hold, or sell Upwork. That is up to you, okay? And I will disclose, I do have a stake in Upwork right now. So I have no problem disclosing that. Anyway, that'll end this video for March. I hope that helped you guys out, showed you some market updates. And let's see if we have time to quickly look. You know what, I'm not going to extend this video any longer. I'm going to end it there. We're not going to have time to get into some of the other more recent charts and stuff like that. I think I showed you enough this month. I'll see you guys in the first week of April. Thanks to my viewers and loyal subscribers for putting up with the hard work. Don't forget to like, share, and subscribe so you get updates on the next training video. And good luck in your investing and trading success. Again, Phil at Laptop Trader on YouTube.